What is up, Zinger Nation? Hope everyone is having a great day back in the office or working from home, wherever you guys are. And I hope you're not A, too sunburnt, B, too hungover, C, stuck in any various travel locations from the long weekend, from the holiday weekend. We had a lot going on here in downtown Detroit this weekend. Again, I hope everyone had a good and fun and safe Memorial Day weekend. Today, we're going to be talking to my man, Ryan Pannell from Kaiju, and we're going to be talking about some risk when it comes to AI. AI has been, of course, the topic of discussion really in the stock market for the past year. NVIDIA hitting new all-time highs today on the heels of the boom in AI. We're going to talk to an expert not only in the AI space, but the financial space as well. That's why it's always great to catch up with Ryan Pannell. So without further ado, let's get the show started. What is up, Zinger Nation? Welcome back to another episode of Benzinga Live. Happy Tuesday, everybody. All right, Ryan, how are you doing today?
I'm good. How you doing, Aaron? I like that intro. It always reminds me of like where your haircut started and where
I
it's
know.
going.
I go through cycles where I'll go like 6 months without getting my hair cut until it gets to a point like now where it's very unmanageable, and then I'll get it cut real short, and then I just repeat the cycle. I like it doing that way once every like 6 months because then it's cheaper. Some people I know go get their hair cut every week or every 3 weeks or so, and I don't have the budget for that.
Yeah, don't move to Geneva then, man. Like guys here are like, every week. Every week.
Yeah.
Every week they'll go, even if it's just like a little cleanup, it's like a little trim, and they're just
well,
pisses you off. Nobody looks scruffy here.
Eventually, I would like to get to that point, especially because I would like to have a, I would like to feel like I'm like paying, $30 for my weekly friendship meeting with my barber too. Like even if I don't need a haircut that badly, just to catch up with someone that I see. So that's a goal of mine in life, is to get to that regular barbershop. But anyway, Ryan, how was your weekend? I never know where you are in the world. Were you celebrating Memorial Day at all?
I'm half American, so I have my my moment of appreciation, and
So you ate
otherwise I just enjoy the market off. Yeah, I enjoy the market off day, right? That's what I get to do. It's always takes me by surprise, like eerily quiet. There's no pre-market buzz. Nobody's talking. Oh, right. Yes. Long weekend. Cause it's not here. I'm back in Switzerland. So.
Well, all right. Before we hop into it and start talking about AI, for maybe some of those who haven't joined us for one of these sessions before, do you want to give a brief introduction into who you are, what Kaiju is, and why we should care about what you have to say about AI?
Okay, sure. Kaiju is a synergistic group of companies that work as an ecosystem within predictive AI in the capital market space. So we started as predictive AI using private fund managers. We launched an RIA a couple of years ago, manage funds both privately and publicly. And we generate all of our own internal predictive AI strategies. We use them ourselves, or we sell them to other financial institutions. So all of that to say, probably nothing that will like be of direct benefit to anybody who's watching. Why should you care? I don't know. I mean, I've been in this space a long time by AI standards, over half a decade in capital markets trading. Before that, I was a quantitative fund manager. Before that, a portfolio manager. Before that, an equities trader. So I have some knowledge that I might be able to share about how AI is working or not.
So not only years in the financial space, but years in the AI space, which, right now comes at a premium because a lot of people are transitioning into AI, calling themselves an AI expert, and they've probably only been in it for a year or two, and you've been in the weeds for a couple of years. So let's get into it. Last month we discussed how AI can enhance human decision making in finance, like choosing optimal entry and exit points. Today we'll shift focus to risk management, a critical component of any sound investing plan. How can AI help us better mitigate risk, Ryan?
Well, I mean, fundamentally, any AI risk mitigation system is only as good as the designers and that's the case with anything that's AI based, right? I mean, if you program bad risk management, you get bad risk management by AI. The fact that it's, you know, performing billions of independent examinations means absolutely nothing. So it really starts with the human part of it. You know, what are you trying to achieve? How can you achieve it? And how can AI help? On the generative AI side, which are the tools that are commonly available to most investors right now, GPT, et cetera, risk management is very difficult to use those tools for because you don't have a validated source of truth, right? It's going out to the internet to get your answers. It can't, I mean, it's going to try and compare those to other answers. It'll give you what the most popular answers are, but not necessarily the correct answers. So I would say currently, heavy dose of caution. I'm really hopeful that we'll see tools, though, implemented within different platforms, whether it's an order management system, execution management system, portfolio management system, Benzinga Pro, something like that, where you will have predictive AI component that can help identify and then make some suggestions about how to manage risk.
Got it. What insights can AI provide that humans can't in managing risk? Is it just the speed at which decisions are made or the amount of data considered? Can AI actually look at things in a way that humans can't?
Yeah, I mean, there's sort of three key areas where AI could be argued to be superior to humans in terms of risk mitigation. One is the expanse of data that it can consume and analyze simultaneously. Like you're talking about the entire stock market at the tick level at the same time. Like I can't do that. I don't know any human that can do that. So it's able to see ripples starting outside of where maybe your concentration is at present a long time before you become aware of it. So that's number one. Number two, it's emotionless, right? I mean, we all want to win, we don't want to lose, and this clouds risk management decisions. I would say it's the number one problem for human traders in managing their risk is that human component. I've seen professional portfolio managers that have been in this game for 10 to 30 years blow up because risk was in their face and they just did not want to acknowledge that it was there and they had to act. AI doesn't care. It doesn't have a bad night. It's not fighting with their wife, girlfriend, boyfriend, mother, father, kid. It's just going to follow protocols religiously without deviation. And then finally, the last thing that it's able to do is quantify risk in the immediate term, like simultaneously with everything else it's evaluating, not just like whether to take a position off, but whether to put two more positions on, how to downsize your risk in a specific position, like all at the same time. Like that's sort of beyond what we can do right now or ever.
Yeah, and the one thing that when I think about AI's potential, especially when it comes to, in the stock market and financial stuff, is a lot of times our human psychology gets in the way of trading. We might know, with the logical side of our brain, like, oh, I should sell here or I should buy here, or things like that. And then once you're dealing with your own money and these things are happening, you're in a stock and you love it long term and it drops 30%, your instinct is going to be to sell it. Whereas AI might be able to analyze this stuff without taking in, that human psychology aspect that makes trading so difficult. Do you think that's like an accurate assessment?
Yeah, absolutely. And it can see underneath the surface. So, our AI risk management system is called the ARC, the AI risk containment system, and it watches everything, the whole market, domestically, and every position we have, every trade inside the portfolio and outside the portfolio. And it will advocate for off ramp decisions without us being able to discern exactly why it's making that suggestion. I mean, years ago, the first time it started doing it, where it wasn't obvious to us, it was really disquieting, right? You have a position that's just going totally perfect. Everything's fine. And this thing says, dump it now. And, we had a whole Slack meeting and then a conference call on, well, what are we going to do? Maybe there's a problem. I don't understand why it would take this position out. The end of the day, if you're a believer in the technology, you're a believer in the technology. We exited the position, watched it like a hawk. Next day, nothing. Next day, nothing. Next day, 40% gap down. Do I know why it made the decision when it did? Can we track it back to one specific criteria we could repeat? No, because it's looking at thousands of it simultaneously and obviously associated it with that risk. It's not going to be able to pinpoint the time. It's like, hey, this is coming this afternoon, tomorrow morning, 2 days from now, but I'm going to make this decision now. Does it trade earnings or news? It doesn't. No, we only consider price, time, and quantity, and really any investment management decision that's made shows up in price, time, and quantity at the end of the day, and that's how we don't get distracted by bad information.
So how right now, Ryan, are you using AI in your risk management at Kaiju?
Well, we use it within the ARC, obviously, which works on a number of different products that we have and in a number of different funds. But again, we start by populating it with human guardrails, right? Like, when we create a new strategy, let's just start from the beginning. We create a new strategy, you give it no guardrails whatsoever, a trading ideology that's been successful, and you task the machine with refining the strategy and perfecting it. And every single time you get like a 10-year KGAR that's, like 35,000%. And you go, oh my God, I beat the market. I've solved it all. I'm the smartest person on the planet. And you take a closer examination, and during that 10-year period, it would have like had 2 or 3 90% drawdowns. Okay, so not ideal. So how do you control that? You start adding layers of risk management that would have protected against those drawdowns. Ideologies, diversification, pauses in allocation, pauses in rebalancing. And sure enough, by the end of all of that, when you've packed in all of this risk mitigation, framework around it, that $35,000 KGAR over 10 years is like 1,200% or 3,000% or whatever it is. It takes a huge chunk out to effectively manage the risk, but your probable downside is maxed out at maybe 18 or 19% in something that has like a 33% per year KGAR. Okay, fine. So that's where our sweet spot is. So you have the machine then act on guardrails that you've created. It can see them better than you can, and it can act quicker than you can, but it didn't come up with them in the first place.
Got it. And then what about managing the risk of AI itself, Ryan? Aren't hallucinations an issue right now with, especially like, you hear that about with the chat GPT models. Do you guys deal with that at Kaiju?
Thankfully, no, because predictive AI can't hallucinate. I mean,
Okay.
that's a bit unfair. I mean, it's like saying, I ride a bicycle. Can you have a car accident? Well, no, because it's not a car, right? So, generative AI can hallucinate because it uses non-standard data and because there are no edges to its data set, right? It's just going to go out into the internet and try to answer a question that you've tasked it with. And it's been reinforcement trained to generate an answer in preference of saying, I don't know, right? Nobody would use GPT if it constantly said, I have no idea. So it's been rewarded for guessing. We don't use that in capital markets trading. We don't reward things for guessing, and we're using closed data sets, price, time, and quantity, every trade ever. Like those aren't under discussion, right? We're not disagreeing over what the data are. If it sees the pattern's there. So we don't have to worry about hallucination. But yeah, it's unfortunately a part of generative AI, and there's no way to get that out.
Got it. And then right now, Ryan, I mean, I know a lot of these issues are related to generative versus predictive AI. Given the high profile nature of some of these hallucinations, how can we foster more trust in AI as a whole, particularly within the investment community?
Well, I think understanding that hallucinations as part of generative AI are just a necessary evil. There's no way to get rid of them unless we had like a global ISO standard for data and truth on the internet. Like, obviously never going to happen. So that's not a problem that we
Yeah,
can
you just need to
solve.
be on one Reddit comment thread to realize that that's never going to happen.
Exactly.
The
Exactly.
most famous example I can think of was an old bodybuilding forum where there was a multi-day argument in the thread about how many days are in a week.
Yeah. Yeah. Okay, that's just That's
It's a
just
long story short, but one guy was basically like, yeah, I work out every other day, so I end up working out 4 times a week. And a guy was like, no, you'd work out 3.5 times a week. And he was like, no, Sunday, Sunday, Tuesday, Thursday, Saturday, that's 4 days a week. And then it was this whole thing, but it
That's
was,
just painful. That's
yeah.
just painful to even contemplate. I mean, if you want a generative system is supposed to let you ask it anything, right? If it's a text-based system, go get me this information or create something for me in text. If it's image generation, it's like, I've imagined this. Go create it, right? So, you have to give it that kind of latitude, and you get hallucinations from that. Predictive AI, we're not trying to do the same things.
Okay, well, and then so can AI police itself? Can it mitigate its own risk? Do we always need a human in the decision chain?
In predictive AI, it can absolutely mitigate its own risk because you give it the capacity to do that. You say, don't go outside of here. If you see this, make any number of these decisions. You have to exist with this much capital reserve. You can't have this much exposure, et cetera, et cetera. In terms of mitigating risk in generative AI, you need multiple engines tasked with controlling each other's risk. So the primary engine, tries to answer your question. Terrible question would be like, what's a good tech stock to trade today? Right? Okay. Please don't invest based on that. But you could ask it that question, and then it's going to do its research and give an answer. And 6 different generative AI engines can try to validate the source of truth for that answer. So you can task them in that way. Would I still commit large amounts of capital to that? No, I wouldn't. But in terms of mitigating like outside risk, you have to remember that it can only accept risk that you've allowed it to accept. So like our system, for example, can't drive a busload of money off of a cliff because we don't actually allow it to do that. It can't suddenly go, yeah, I'm going to sell short premium in GameStop above the market at an outside. Like there's no way it's allowed to do that. It doesn't have the capacity. So it really can't get into that doom and gloom scenario.
So it's working within the own confines of like what it's set up to do and what you guys
Correct.
have developed at Kaiju.
Correct.
Yeah. And I think that helps, kind of demystify this, that like, oh, it's going to start doing this and that on its own. It's like, no, it's going to do what it's trained to do, which can be very helpful for us. You mentioned that, it's going to be difficult for the internet to come to an overall consensus, but what about regulation from a different point? What kind of role is the government or other regulatory bodies playing in defining AI's role in finance? Should it play a bigger role, and how do we mitigate risk market wide on a policy level?
Yeah, those are good and deep questions for sure, Aaron. And I think it depends on which side you're asking about regulation. Are you asking about it on the predictive side, where currently, and I mean, I'm not exposing my bias here. Currently, there's not a lot of regulation on the predictive side, which is appropriate because thus far it's primarily being used to identify patterns that we can predate on, right? Like that's what we do. You find a pattern, it's associated with an outcome that repeats, we trade it up or down. It's going to be, 8 months, 12 months before these systems start to be manipulative in nature, right? They try to predate on order flow or manipulate order flow in a way that causes traders to behave a certain way. Do we need regulation there? Absolutely. That's market manipulation. We don't currently have regulation that would apply to that. Like you can't spoof orders. I can't put like big deck orders up above the market, like sell at huge size and then constantly pull them. I'll get flagged. I'll get an SEC investigation if I do that. Still really difficult to prove because you have the right to change your mind. But if you have a history of it, fine. But in terms of like manipulating order flow by actually trading within the order flow, you have a right to slice and size your orders any way you like, time them any way you like, and it would be almost impossible to prove that that had manipulated a behavior. So that concerns me on the predictive side. On the generative side, obviously buyer beware. You take stock tips from ChatGPT. I'm so sorry, but that's not going to work out fantastically. And the regulation I think you're going to see is on copyright infringement, ownership of the data that's used to train the model, and ultimately like theft of likeness. Just saw this with OpenAI and Scarlett Johansson, right?
Yeah, that was a interesting saga to follow there. Well, all right, Ryan, this has been a great discussion. We're coming up on our 20-minute mark here. I do see some questions in the chat. Can your AI at Kaiju take into account earnings and news?
Yeah, I did see that one earlier on. I worked it into another answer, but
Okay.
in case Hank wasn't here or somebody else,
Yeah.
it doesn't take into account earnings or news because it's looking at price, time, and quantity. So usually, if there's market participant um, sentiment that there's going to be a move to the upside or the downside, obviously you would see orders being stacked up to take advantage of that movement. It's still, I mean, it's so heavily guarded earnings releases. It's so punished from a fine perspective that like there's no secret room where you're getting like pre-earnings. There's like very few, if any, corporate leaks ever. So in the sense that we look for patterns in price, time, and quantity, yes. In terms of do we actually consume the earnings releases or news and try to determine sentiment? No, that's not been demonstrated to be a winning proposition on any type of AI yet.
Got it. Well, Ryan, again, this has been an awesome discussion. It's always great to catch up with you. Because again, like it's rare to find someone that has expertise and experience in both the financial markets or AI. I wouldn't want to be taking stock picking advice from Sam Altman. I wouldn't want to be getting AI advice from Warren Buffett. But you take a little bit of expertise from both. So it's always fun to catch up with you, Ryan, and I hope the chat and everyone in the audience has felt this to be an instructive and informative show, and we're going to be doing more of these.
Yeah, thank you, Aaron. It's always good to be on, and thanks for putting me in a bucket with Sam Altman and Warren Buffett. I think maybe slightly outside of my capabilities, but I'll take it.
Well, there you know what I'm saying is that it's not a lot of people in today's world that know what's going on with AI and financial markets. You're one of them, and that's why. And on top of being just a good guy and a fun guy to talk to, so Ryan, again, thanks for coming on with us this Tuesday. That feels like a Monday, and we'll have to get another one of these sessions in the next few weeks.
Definitely sounds good, and safe trading to everyone who's watching.
All right, guys. Well, that was Ryan Pannell from Kaiju. We're going to go ahead and wrap up today's Benzinga Live. Thanks to everyone who tuned in. Please smash the like if you haven't already. Let me check what's coming up next here on Benzinga's YouTube channel. We got the Paul Meeks Show, Tech Insider, coming in at 11:30. Stay tuned for that. This stream should redirect you there. We will see you guys next time.